This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's 8:37 p.m. on May 20th, 2020. Welcome. Full disclosure, these strategic webinars are purely for financial education, not for any solicitation or advice. Session will be recorded, uploaded to our Clueless Trading YouTube channel for viewing by all other members out there. Hopefully they get to see it before the market begins tomorrow. And on that note, thank you for being here. And I'm sure some other people are going to filter in. It is never the numbers, like my father used to say. I learned that. It's never the numbers or the masses that's going to make you successful. Everything in life is about a solo achievement. Okay? He who travels fast travels alone. Machiavelli said that. And yeah, he was an arrogant bastard, but he was good, right? So that's the way I look at it. So he who travels alone travels fast. That's number one rule in trading, guys. Okay? So we're going to talk a little bit about that. And then we have a special guest, a great member who's been with us for quite a few months now. Who's here? Paul. Doesn't hide his name. Paul. Who's going to talk a little bit about why he uses the tactical resources of Clueless Trading to make. I am going to go New York full blast right now, Donald Trump style. Shitloads of money. Like I'm talking like my head spins. Seriously. All right? On certain stocks, on the overall markets, at certain times, not every day, not every week, but he's going to talk and explain to all of you how he does it. Now, Paul doesn't have, I don't need to give Paul any money. I don't need to slip him a $100 bill and say, Paul, hey, just say something nice about me. Because nobody says something nice about me. In fact, the only people who I get very happy about when they say something nice about me are a few good friends that I have and my wife. Exactly. So Paul is going to have the stage tonight for a short while. And I think you guys will find it very, very helpful. And if anytime somebody needs some sort of direct conversation with Paul, and in the meantime, we're going to talk about this. Facebook, as one of the stocks that Paul made crap loads on. And of course, we're going to look about the market that I've been dead right on. Okay? So that's about it. In the meantime, don't mind this little noise coming out there because I had a desire to eat these fresh almonds that I always do while I'm talking. So guys, let's talk about what's going on with the market. And I need some quick answers, not long-winded like, that type of stuff. Why is the market going up? I don't want to pick names, but Paul, don't answer. Rob Anderson, why the market is going up? Rob is a new member. Everyone say hello to him. Rob, are you connected? Did you finally get a mic so we can hear your lovely voice?
But it doesn't work.
Oh, it works because we can hear you. There you go. If you can't figure out a mic, don't be a trader, okay?
Oh, and you know what the bad thing is? I'm an IT.
Yeah, now you went back in the cave. Fix your friggin' mic, man, all right? Seriously, because I don't want to look at text you putting out there like questions, and you're very smart. So, Mac Attack, Ed Morgan, boss. Why are the markets going higher?
America's going back to work, opening back up.
Yeah, that's a very good reason. Yeah. Can somebody give me an actual technical market reason why the market is going higher?
Federal Reserve said they're going to throw as much money at the problem as it takes.
That is a very good answer. It's called liquidity. Flush the economy with money, and Powell's doing, Jerome Powell's doing exactly, thank you, Mike, that Donald Trump, our president, wanted, which is flush the economy with money. What is the technical trading reason why the markets are going higher? And I have talked about it before. That's the A plus answer. Every other answer gets a B plus, A minus, but what's the A plus answer?
No, the virus. We're
Bullshit.
making progress on the potential progress.
That's still a B plus, A minus answer. What is the technical trading reason why the markets are going higher? Guys, you guys are traders. You should know it. I've talked about it a lot. Why do markets sometimes go higher even on a day that the news is bad? Which have been many days. When jobless numbers are so fiercely bad, and I'm still saying uptrend is intact with my charts, but I've also explained to you guys why that happens. You guys all know the answer, but you're not thinking. I want you guys to be thinkers. Make America smart again.
Volume.
Keep thinking while I pull my next chart out. What is the technical reason why the markets go higher? You're option traders. So what
There's
happened?
I don't know. There's people on the sidelines. People are missing it.
Yes, you're very close to the answer. You're very close to the answer.
A lot of
And
people are short, and so now we're short covering, and
yes, there we go. Now we're getting close. The market is short covering hard because the big boys are losing their pants right now. What is the best short covering stock ever that we have done very well on repeatedly many times? I'm not in it right now, but what is the ultimate stock that the hedge funds always short cover on certain days?
Netflix is a good one.
Yes.
Tesla.
What's the best one?
Yes.
Come on, you guys know it. Who's
Yeah,
the one that the world? Huh? Say it.
Tesla's a good one.
Tesla. Yeah, exactly. Who said that?
Mac.
Yeah, exactly. So you got to know the dynamics of the market in order to be a trader. Exactly. Tesla's heavily shorted. All the big guys always short it every time it's up 50. And then what happens? It goes up 100. Exactly. So what's happening with the markets? I'm trying to get an actual 1 minute chart. Hold on. Is there are big quant funds called CTA funds. Google it. More importantly, go to Investopedia. Commodity trading accounts, they call it. I don't know why they call it commodity trading accounts because they're always shorting S&P futures back and forth. And all these big short guys completely short the market. $7 to $8 trillion sitting on the sidelines. I've talked about it repeatedly. And then the big shots come on CNBC the next day and say the same thing. They're freaking shorting the market inside out. And the market has a slice of positive news, and then they go nuts. And we're just playing the charts and being dead right on many, many things, including doubling the SPY shorts yesterday. Anyone picked up one of those SPY puts yesterday at like a 93 cents a dollar? I had a bunch. I'm not going to tell you how many I had. So I sold like 80% of them, left a little bit in there just in case today opened lower. Doubled it. They went from $1 to $2.13. You guys know what I'm talking about, right?
Yep,
Exactly. Why not do it?
I did.
Good. That's what I want to hear. And thank God I didn't leave the whole thing in there because otherwise I'd be sitting at a fat loss right now. And that's exactly what the markets do. This was Tuesday. So let's look at this. So yes, the original question was the answer to that is that a significant amount of quant trading funds, Wall Street investment banks, and hedge funds are hardcore short, and they are getting blasted. So here's my next question, which is related to this. And please think and answer, because all of you are very smart. But when it comes to markets, you kind of get like a little bit fuzzy in the head. Like, otherwise you guys are all smart. Okay? When do you think this, and I'm not asking for numbers and stuff, I've already showed that. When do you think on a psychological level, this surge in the market will stop? And it relates to shorts. Somebody please give me an answer while I eat my almonds. Come on, guys.
When we get to the all-time high.
Paul, don't answer. No, we're not going to go to all-time high right away. I know Paul's like, baller. Your stage is coming. And it was somebody else, please.
When everything opens back up,
Oh, come on, man. I just gave you a clue. You know what? This is why Japanese, Chinese, Canadian, Hong Kong, Indian, Bangladesh kids get into Harvard and our kids fail the entrance exams because they're listening to Jay-Z and looking at Jennifer J-Lo's ass. Oops, I'm sorry. Can you hear me? Yeah, I can hear you. Somebody give me a frigging answer. I just told you it has to get related. It's got related. I don't want to get like too professorial tonight. Okay, it has to do with what I just explained. The CTA quant fund short positions. So put one and one together and get into the Harvard entrance exam instead of every other foreign kid getting in there because they think smarter than us.
once the shorts are done shorting,
Yes.
then they
Yes.
turns around.
Yes. Who said that?
Ed.
Exactly. Ed, you schmuck, man. I love you. Exactly. And Ed's an upstate New Yorker, right? Upstate New York, Ed.
Yep.
Love you, man. You just frigging made my night. Exactly. Exactly. When the shorts are done, when they squeeze the most of the quant funds and all these hardcore, in my opinion, US haters, okay? I don't want to get into a Trump rally right now, but seriously. All right? Seriously, bunch of schmucks. US this, US that, we're all going to die. Okay, yeah, we have to be careful. It's not a joke. Let's not take it lightly. US economy is done, blah, blah, blah. Okay, when they get squeezed to kingdom come and they don't have that many short positions out there, as Ed said, that's when the market's going to fall. And it doesn't mean fall to the bottom. It means a big correction. Thank you, Ed. Did everyone understand what Ed said?
Yes.
Of course. Exactly. And Ed's not some Wall Street guy, whatever. Okay, he's a real American patriot. He's my friend. Know his brother. He knows me from years ago from Stock Twit. And God bless you. All right, let's move on. Okay, so we'll take a couple of look at the charts. Give the little stage to my friend Paul to explain a couple of things, and I think that'll be very good. So where are we right now? As I've talked about repeatedly on multiple charts, we have some very powerful patterns. And I gave you the background reasons why it's happening. It's not just the shorts. It's every other answer that every other person gave. They're all correct. But the baller A+ answer came from Mr. Morgan, Ed Morgan. Okay? Because the shorts are getting frigging squeezed. Market is about only one thing, liquidity. How much money is going in, how much money is going out. Some people say, why is the market going up? Why is the stock going up? Very simple. The more buyers than sellers. So what does a short do when the markets are going the wrong way? For a short seller, the market's going the wrong way means the market's going higher. What is a short seller doing at that point?
Buying.
Exactly. Exactly. So a lot of movement that happens on a certain day, bad news, ugly news, whatever, and the market's going higher, it's short squeeze. Is it real? Not really. Are they sincere buyers? No, they're forced buyers. Just the way I talked about when the markets were crashing all the way down, there was forced selling. What was the term that I use all the time that I know from my days on Wall Street? And you guys have to know this if you're going to survive in this business. What is this type of huge can thing? What is this?
Waterfall decline.
Yes, that's one word. If the short seller is forced buying, what are the longs doing?
Find the dip.
Oh, Jesus Christ. Seriously, man. I swear to God, that's I really, I'm actually calling down tomorrow. I said, listen, we gotta really pay our teachers, like, instead of 30,000-40,000 bucks, let's pay them 200,000 bucks to teach. Okay, I just gave you the answer. You just have to turn the thing opposite down. I said this is all quant, not all, but quant force buying, right? The shorts are getting squeezed. So what are the longs doing? Long funds doing here?
They're selling.
Why can't somebody say fucking force selling? It's called margin sellouts. Guys, come on. We want to be smart, but teach our kids to be smart. I just told you this is forced buying in some cases. So this is forced selling. It's called forced margin sellouts. How many times have I said that over and over and over again on my Twitter feed? Can somebody tell me? Come on, what are you guys scared? Come on. Wake up, okay? Forced margin sellouts are because stops are going off. They don't want to sell, but they have to sell because they are leveraged. Well, right now, in many cases, they are very leveraged on the short side. So just the opposite. They are forced to buy. Do you guys understand that concept?
Yep.
Yes.
Exactly.
Yes.
Exactly. The point is, when forced margin sellouts happen, do they happen at a ferocious, what degree angle is this?
45.
I like that. Who said that?
Ed.
Yeah, Ed, man. Fucking great, man. I'm hiring you. Actually, I'm becoming your partner. Yeah, it's a 45 frigging digging angle. What kind of angle is this?
90.
Exactly. Guys, that's why we suck in math, Ed. Nobody else answers. Everyone's like quiet. They're all like big shots here. Seriously. Paul's being quiet because he knows the answer. It's a friggin' 90-degree angle. A slant is a 45-degree angle. What is this angle? What do you think, Ed?
That's a 45 up. Well,
That's,
almost 30.
yeah, 30, right? I'll call it 30, right?
Yeah.
Oh. Are you guys with me with what we're talking about? Because this is what really makes the big money. Okay? I would say it's a 30-degree angle up. My question is, and somebody please, this anyone can answer, and please answer. When forced margin sellouts happen, when funds, institutions are 70% or 60% leveraged, that means they are borrowing for every $100, they're borrowing $600. Okay? This is the reason why these algos plummet, why these hedge funds plummet. And the average person out there says, what the heck is going on? What the heck is going on is quant funds are deleveraging. It's called and you guys have heard that term, right? Deleveraging.
Yep.
Yeah, just the way it happened in 2007, 2009, when all the gamblers, buying like houses, putting down like 10% or no doc loans, and then everything collapsed. They deleveraged. They lost everything.
Hmm.
So bottom line is, you have to understand the broader picture of the market, because that's part of my job to do. The rest of the stuff, hey, I got some friggin' great trades I could blow your minds off because they're happening almost every day. But you have to understand the bigger picture of the market. So, Ed, like you said, 30%, I'd say, yeah, 30, 35%. Now, why does a deleveraging happen faster than a releveraging, or as the market keeps on going higher? Why is this 30%, 30 degree? It's not percent, Ed, I'm wrong. 30-degree angle, okay? It's a 45-degree angle, if you guys remember. Just the way ascending triangle, right? Descending triangle. Simple geometry. Make America smart again.
I like
Like
that.
Ed's son, it's computer programming. He'd be like laughing. He's like, what is this guy talking about? There's these old people that don't understand what these simple things are. Ed's son will be like laughing. My kid would be laughing his ass out right now if you ever heard one of my videos. Okay, so here's my point. This is a 30-degree angle. Why does a 45-degree angle, or in some cases like almost a 90-degree angle, happen in the fallout happen in the markets during hardcore
It's the
sellout?
algorithms are tripping on forced margin, so it's
Okay, and
fall off the shelf.
what about the human factor? Are humans more scared about fear, or are they more happy about happiness?
Fear, not euphoria.
Fear, yeah.
Yeah.
Huh? Let's
Fear.
look at ourselves. Are we happy about great trades that we make? Look, I've been doing really well. And right after this, I'm going to give the stage to my friend Paul. I'm doing damn well. Am I really happy with my performance? Nope. And I'm pulling killer trades. Am I holding things the way I should? Nope. Am I staggering my profits? Yes. Am I regretting some of the fact that I'm selling it and then 2 hours later they're going higher? Yes. So why do humans? Here's the answer, guys. I don't need to be like Tony Robbins here, but I have to be. Fear is a bigger emotional factor than happiness. That's the reason why markets fall harder than when they rise. Do you guys understand what I'm saying?
Yeah.
True.
Right.
Markets don't do this. Markets do this. And this is exactly what is happening right now. We are always cautious about our happiness. We are very fearful. Oh, well, I'm not. Okay? But we're very fearful about what's coming. And that's why. No, exactly. Exactly. I'm kidding around. And that's
No.
why the markets crash like that. And that's the reason mom and pop is like, I want to get in the market. I want to get in the market. That's why it's a 30-degree angle, as my friend Ed Morgan just said. Why is the market like this? Let me change.
Is that a 22.5 degree angle?
Don't bore me right now, okay? Trying to teach you guys something. You want 22.5? Fucking, just, try to make some real money and then tell me about 22.5. Just kidding. All right. So seriously, so why? When you listen to the idiots on TV, they're like, "Whoa, we have a V-shaped thing." They're all liars. This is a V-shaped recovery. It is not. It is a L-shaped recovery, which, if the coronavirus, like I said on my previous webinars, and all of you agree with me, and of course know it, if we don't get a resumption of massive spikes, it won't be a L anymore. It'll be like, whoop! And we're going to hit 3,200, 3,300, 3,400. But we don't know yet. And we have to be careful. If every guy in New York wants to go and kiss and then whatever, like do whatever with the girl next door and at the bar, well, it's going to come back. There's enough New York people who are carriers. The virus just doesn't disappear. It's there. Corona, well, not this particular strain, but Corona is actually a similar strain to the flu. This one is a different story because of rats and bats and the wet markets in China, which I've talked about before. I don't want to get into it too much. Okay? So, but Corona's been there. Not just this stupid beer some of you guys ever drank. Whoever drank Corona should ask for the money back. So, you know what I'm saying? So this is not a V shape. This is an L shape. And if things do work out, then boom, 3,400. So here's my next question. Who is the analyst who said 3,400, possibly 3,700 by late this year, if not early part of next year?
Tommy Lee.
Yeah. Who said that?
Ed,
Ed, what's wrong with you, man?
I don't know.
I don't know, man. All of a sudden, you're like way up
He's
there.
on a tear.
Exactly. No, he's not on a tear. Ed's an old friend of mine. You see, question is, he's not on a tear. You guys are on some weird, like, like non-tear. I mean, come on. He's just asking. What Ed is doing, he's just answering simple, common questions, and he's following the Twitter feed here and there. Right, Ed? That's all you're doing. So all of you guys should do that. Tom Lee, the little chubby guy, one strat, one of the best analysts from JP Morgan. I've been following him for years. There's Tom Lee. There's this beautiful woman. Her name is Katie Stockton. Look her up. I had the opportunity, like I said in my previous webinars, let me clean this out, to sit into her trading sessions way back, in the early 2000s. She's still gorgeous the way she was, and she's the best. And a lot of the time she talks about things is what I'm showing on my chart. I'm like, what a privilege to be in that crowd. Seriously, I don't want to be sitting with Jay-Z and J-Lo and drinking or Puff Daddy and drinking cheap vodka that they market. I want to be sitting with people like that. That's what makes America great. Not the rap stars. Okay, somebody said, oh, you really hate rap stars. No, I don't. I just think like they don't provide any brain power for us to be the number one in the world. Okay, they make a lot of money. Thank you. Okay, let's move on. So bottom line is, yes. So right now we are at a major resistance. What does that mean? We could fall 600 points tomorrow. I explained that before. Look at this. We hit this level that I told you guys we'd hit. Right now, the next level is here. Next level is here. But these are hundreds of points lower. So what's the way we do it? We play it somewhat cautious, not scared. We stay on our selective trades. Lots of names I give you that none of you know about, right? But some of you take the trades. RETA, like all those ones. Moderna, I love. Anyone see the Moderna CEO's interview on CNBC?
I was working.
Oh, okay. So
Yeah, I
look,
saw part of it.
part of it, right? So look around. I think it's like pretty serious guy. He spoke like he's an Armenian gangster. You know me. I mean, you could opportunity racist. Armenians are the gangsters. They drive the most expensive cars in the world. They're the biggest crooks, and he's the smartest guy. And he was so cool. He just sat there and he's whatever he's living in Palm Beach, probably in Mar-a-Lago, and he's like, answer the questions right. Moderna is a real company. Moderna is all run by French. He's Armenian. He hires the best brains in the world. And their drug is real. We've been talking about that since 22. And the stock went to 94. Stay long Moderna. And Monsef Saloui, whatever his last name is, the Moroccan guy, Moroccan-French guy, left Moderna to join Donald Trump's task force. How great is that? You think President Trump is not going to pitch Moderna on his next press conference? Come on, guys, wake up. Stay long. So so that's good. Aside from that, we have a lot of winners. Please check on Twitter feed. And in the meantime, I'd like to put the plate just and a few words from my friend Paul.
Well, thanks, Frank.
And I will, and as you're talking, I'm going to show a few things that you would like to mention. Yeah, please go ahead, Paul. Tell people.
Yeah, just keep it really short. I want you to have time to get to all the great charts and everything that you got coming up. So, yeah, I just wanted to give some helpful thoughts, I think, to some of the members, and just maybe describe a little bit about how I use your service, Frank. It's maybe a little bit.
I think that would be really great, and also mention some of the stocks you've made some very good money on. But more importantly, just explain to them, like we talked about before, that like how they should use my service. Like you said, go ahead, sir.
Yeah, and I guess I'll just start off by saying, like, if I can make money in this market, anybody can. I've been trading probably seriously for 1 year, and into trading totally about 2 years altogether. And I love your service. I use it a little bit different than you promote the selective trades and things like that. What I use your service mostly for is.
Can I just ask you one quick question?
Yeah,
Won't interject
sure.
How did you find me? Because we don't advertise or anything.
I found you on StockTwits. My handle is
Oh,
volatility888, and yeah,
okay.
I think actually how I found you is I was I like to see what makes the people that have so many followers special, and
Okay.
I checked you out and you responded, and we went from there, and I joined your service, and the rest is
I
history. So
remember we spoke a little bit on direct message on StockTwits, and I said, yeah, come by, visit. I mean, come by, like join. And you said, yeah, maybe in a little bit, this and that, and then you did. But please continue, just so you guys know where you came from. Okay, it's not like Okay, go ahead.
yeah, I
So
started your trial, and I didn't really know what to expect, but I really liked all the stuff I was learning on your conference calls, and also or your webinars, and also your Twitter feed, of course. So I think the number one tip I can give to everybody here is discover your own style. And Frank, you've mentioned that many times on the
many
advanced
times,
coaching
yes.
sessions as well too. And I think that's so important, is just find your own style. Because for myself, I'm not comfortable with buying options for 2 weeks out and trading them on a daily basis. I found my comfort zone to be holding options for about 4 months to 6 months is definitely my comfort zone. And I'm not afraid to go heavy into them, but I just like the comfort of having more time on the side. So yeah, I had a really big week, and
So
it wasn't.
Paul, let me just stop you for 1 second. It's a question that many people might ask you, and I would ask other people to ask Paul. Paul is a very straightforward person. Is how do you feel comfortable buying stuff 3-4 months out when the markets are so volatile? I'm just curious because it's a question I ask myself.
Yeah, I just when it gets time to expiration date, the pressure is really on, and I guess I have more comfort knowing that the markets have volatility and they will go up and down,
Mm-hmm.
and I've got time to react on that. And so many times when the market, has a quick sell-off, like yesterday was a perfect example. End of the day,
Yes.
it's not going to freak you out, because you know that there's you still got months left on it. Where somebody that expires this Friday, they probably got
Correct.
trapped like so many bears did, and probably just sold out, and then they wake up and the market's way higher, left them behind. Um, yeah, so I think just finding your own style, and I use your service every day to check the Twitter feed, and so many times actually, Frank, you've helped me by me deciding not to do anything, because you've taken a potentially scary situation where everybody's dogmatic bears, like you said, in the last few weeks, and throughout this whole
So
rebound.
let me stop you on that point, and guys, you will find this useful. So one of the things that Paul and me talk like a couple of times a week, as friends. And I'm truly, I'll tell you, I unbelievable. And listen, this is a business about money, and Paul's not going to talk about what he made and stuff, but what he made is what people would probably not even make in 2 years. All right, just over the last couple of weeks. So, Paul, one of the things you mentioned is what I do during extreme circumstances. You know, there's an old saying on Wall Street, an old saying in life: everyone's a friggin' genius when things are good, right? But one of the things you talked about, I want you to mention to people, is what I do when things are like going completely bonkers down. Like when the market was going nuts on March 23rd, and I was
Yep.
begging and pleading. Well, I don't beg and plead because that's only person I beg and plead to is my wife. I'm just kidding, and God, okay. And I was saying, buy, look at these numbers, look at this. There's going to be equal and opposite reaction. I talked about all that stuff. So just,
Yep.
I think that
Yeah,
has an
definitely.
effect on you, but I'm just asking. Go ahead.
Yeah, for sure. I'd actually recommend everyone go back and check those replays because this is an unprecedented time. March 23rd was the low. Everybody was freaking out, and go and listen to those videos that Frank had out around that time. It definitely inspired me to put some money into the market, and that's really what came to fruition this week. The
And,
profits paid off.
and just so you guys know, this is a weekly chart. And just so you, all of you know, many of you who are maybe not that long with us, my biggest strength comes when things are falling apart. I am a disaster specialist. I am a distressed. How many times have in my webinars have I said I love buying distressed assets?
Yeah, and I
Distressed
remember
assets, right? And
in
distressed assets are when
yeah.
things are just falling apart and every bozo in town and your mind and your account is looking like crap short term. And I'm saying, get some money, get in there. It is going to be vicious on the upside. Nobody believes me till they believe me because I prove it right. Is this the first time? No. So I think that's one of the things Paul was talking about. Paul, what are the good little pointers that, and this is a weekly chart of the S&P 500, just one of my charts that's telling you we are going higher.
Yeah,
What are
you
the
look at the technicals.
little, how do you manage your trades? Like when you're up
Yeah.
that much money and stuff, I mean, that takes balls not to sell sometimes. So how do you do it? Just tell
Yeah,
people.
still learning. Like I'm still relatively a new trader. But yeah, like when you mention stuff on your calls and like the McClellan oscillator was great in March 23rd. It's basically like this is low, super low. Just close your eyes and buy. That really helped. And also just not selling, actually not panicking when there's dogmatic bears out there everywhere, and just holding my
Correct.
position. And then
And more importantly, the algorithmic programs that affect us every single day. And case in
yeah,
example was yesterday.
yeah. Yeah, and just and I think the other thing you mentioned just I think a couple of calls ago is managing your portfolio.
Yep.
It was really good to hear that you didn't let anybody off the hook that says I couldn't buy something. It's basically managing your portfolio, and for me that really helped this week as well too. I sold a large position of something I was winning on a lot, and I moved that money into something else that made a lot more money than I would have if I kept it
So
in that winner.
let me ask you a question which other people might wonder. Do you hold multiple positions, Paul, or do you just focus and bulk up on just a few positions that you truly believe in, and then, of course, with my charts and all that stuff and your instincts that you stick with?
Yeah. Yeah, it was, I think everyone, if they're honest with themselves, said they were scared, like in March. And so what I did is I went full leap. So I wanted to get in the market. I wanted to try to
Yep.
get
Hmm.
part of this discount. So, I didn't, when I get scared, I go further out in time. So I bought a bunch of leaps and I bought the companies I feel mostly comfortable with,
So
which is big.
what were the
Yep.
companies that you put your big bets on?
Yeah, I basically put a third into Amazon, a third into Apple, and a third into Facebook. And then as the market started creeping up, then I divested a bit from those, and I went a little bit shorter term, like 6 months out on calls, and those are really paying off right now.
Now you also went pretty heavy on Apple, right?
Yeah, Apple, Amazon, and Facebook were my go-to during the height of the crisis,
Okay,
and
okay.
I've added
And
some different names since then.
And if I remember correctly, you were not really a Tesla player, but you got into it because when I mentioned Tesla when it was
Yeah,
down at 680, I believe you put in a bunch of money and then that thing really went nuts when it hit 800 plus, correct?
Yeah, I was probably one day short there from really making a killing on that one. But I made some Tesla a little bit today actually. I think there's a big
Yep.
move coming either way, but we'll see how it plays out. But I'm bullish on that right now for sure.
Okay. Gentlemen, I open the floor up because Paul has taken his precious time to, talk a couple of his thoughts, and he's not a man of a lot of words. So please, anyone just throw out a couple of quick questions, especially new people. Rob, and who's AT&T, by the way?
What about what's going to happen to all the Chinese stocks like Tencent and Alibaba?
Go ahead, Paul. Please answer your thoughts.
Yeah. My personal take on that is, first of all, it's a great political move by the Republicans because it has to go to the House vote next. And what are they going to do if they say no to that? Then it shows that they're on the Chinese side, and the sentiment against China is really bad amongst voters right now. So they lose that way. And if they say yes to it, then the Republicans look great because they're siding with the Republicans' great idea to do it. So political, it's a great move politically. I think also from a market perspective, it's going to spook a lot of investors. A lot of people in the world that aren't in China invest in those big companies, and I think they're going to get out and go into the American tech. So if you're in Baidu, you're going to go to Google and so forth.
So, Paul, just fix your mic a little bit so it doesn't echo that much
Oh,
because
okay.
you're saying some very important points. Are you there?
Yeah. Yeah.
Yeah,
Do you want me to repeat that? Or?
yeah, no, that's better. But yeah, go ahead. Go ahead with what you were saying. So basically, it's a
Yeah.
win-win for the GOP and the Republicans because my feeling is, and I've said this before, and this is very important because those shorts on the Alibaba and stuff, I didn't put like that much in, thank God, are not working. So what's that saying? That means that this is not a full-scale collapse of our relationship, of our tech relationship with China. What this simply means, in simple English, is this is a political game that Donald always plays. But if the Senate authorization for the accounting thing, which has been going on for a long time, by the way, I was one of the first guys back on stock twits. I can't even remember when Alibaba came public. I think 2011, 2012. I used to rant against the fact that companies like Alibaba should never, ever come public in the United States. Why? Because I hated the Chinese companies? No, because I felt that they wouldn't be accountable under US standards. People used to go, what are you so against Alibaba? I'll find my my post. Two of the other companies that worked on Wall Street, we took a bunch of medium-sized Chinese companies public. I made a lot of money selling those private placements and that money. And they were garbage. And the only reason the partners did that, to make millions of dollars. There are so many garbage small Chinese companies. Small. I'm not talking about Alibaba. I'm not talking about JD.com. Okay, that I tried to put in some shorts, didn't work. I'm not talking about NetEase or Baidu. These guys do follow U.S. accounting standards. I'm talking about so many mid to small tier Chinese companies that are out there that have come public since 2000s that are complete garbage. And the only reason that Wall Street firms brought them public, money. And nothing wrong with that. But how about keeping them accountable? Telling you, garbage. And that is what the Senate went after today. So this is not new news. That's the reason why the stocks initially went down hard and then bounced. And if I was fast enough, I should have played the bounce. Did you guys understand what I said?
Yep.
Exactly. So it's not, because if we completely decouple from the Chinese tech industry, trust me, it's not good for anybody short term. Yes, I always believe we should buy American. I always believe buy an iPhone. I always believe burn your Samsung. Okay? I believe that. People say, hey, this guy's a nut. Yeah, I'm not a nut. I'm telling you right now. Okay? The more iPhones you buy, the more jobs we can create in America. And on top of that, it's a beautiful phone. Why buy a cheap knockoff when you can buy the real thing? And you guys are like looking at your Samsung like, so nice. Okay, smash it tonight. Okay. So anyway, Paul, one other thing I wanted to ask Paul, because I want to know this, because I'm learning from people all the time, is you believed your conviction was that hard from your own self, and then of course the help of my charts and my emotional stuff that I go nuts over when things go crazy. You went pretty deep and hard, and I'm not going to mention numbers, but the numbers are big, okay, to have made that much of money. Were you at certain points kind of scared or feeling like, oh my God, if this doesn't happen, then I'm going to be in the shitter? And then as you made more money, your confidence grew. Just asking.
Oh yeah, for sure. Like I thought there was a good chance that I could make money, but you never know like which way it's going to go. But I had the comfort with the time frame on my side, and I never would have imagined it would have recovered this fast.
So
That's way beyond.
despite all the negative attacks sometimes from the government on Facebook, which was one of your biggest winners, and
Yeah,
other things, you still felt
yeah,
like, hey, and then when the Shopify thing came around, and we have done very well in Shopify overall, but when the Shopify Facebook partnership for Facebook shopping came along, you're just like, just that's it, right?
yeah. That was a surprise. I didn't do any trading during that. I just held my positions and made a lot of money today just holding. And we got
And
like
you do realize yesterday they ran Facebook up, then they pulled it down by $3. You guys know that, right? That's what they did, because I bought the
yeah,
calls and then I bought more, and I woke up early this morning, as I always do. The stock's up like 4, and it's up again another 2, and this bullish candle is pointing. I mean, I don't know where it's pointing to right now, because the only thing that I can draw where Facebook can go, because this could be a huge venture at some point. Eventually, it's going to go to $272. So, Paul, on a
yeah,
last note, so we don't,
yeah,
because you shared so much stuff. What's your couple of simple pointers that you can tell all of
yeah,
us? Like,
yeah. Just going back to
what
your
what
previous
what's
question
what's
too.
what's
Yeah,
what's working for
sure.
you from
Yeah.
my service, and more importantly, what's working for you because of what you're doing?
Yeah, I don't actually trade the SPY. Well, maybe once in a blue moon I'll trade the SPY, but I just use your SPY charts as like direction for the overall market. So I love that. And yeah, in
Okay.
terms of like my style too, I'm not a type of trader that will pull up a scanner and see what's hot during the day.
Yeah,
I like
I don't
to
do that
do
either. Yeah.
yeah, I like to do less is more for trading and longer time frames. So I think due diligence is it has to be mentioned. Like just know everything about the stocks that you're holding and go on the conference calls, listen to all of them, and that's why I didn't have fear. Like when Facebook they're talking about this regulatory issue, it's come up so much in the past, and the stock didn't really. Initially it reacted to that, but then later it was just like it's just a bunch of
So
noise. See, you understand what's noise and what's not noise the more you pay attention to your stocks.
so let me ask you this question. Do you believe that, and I believe that because I use it all the time, that following these technical swing and even short-term intermediate, this is more of an intermediate term chart on the S&P 500, in this case is the ES futures, does give
Yeah.
you the level of confidence to hold on to something, yes or no?
Yeah, for sure. And just going back to the original comment, there's a million ways to trade the market. I
Yes,
found what works
yes.
for me. Everybody needs to find there's one in a million ways that are just going to be perfect for you. Try some different styles out, and you'll discover it.
Guys, you heard it. Anyone has any questions, please ask Paul. I mean, he's not going to be doing this every other day, you know what I'm saying? So ask him.
Hey, good job, Paul. It's Ed. Do you just buy calls, or do you buy like spreads, or you just went out and bought a call?
Good question.
Yeah, yeah, that's a good question. I'm still learning, and I need to get better at protecting my downside. I really excel when the market's coming up from a bottom.
Hmm.
Probably because I'm bullish bias for sure. Um, Yeah, I buy pretty much calls, and then what I'm getting better at
So
too is just uh,
basically what Paul, I don't want to cut you off, but just to
yeah,
explain, Paul is like me. Like, I don't want to do complicated stuff because I'm not that smart, okay? And I believe I used to do, like, spreads, strangles, and all kinds of like different things. And I realized the end result is a straight binary call or put at many times. Yes or no? Like, you do a directional bet on something going higher or lower. Some people say, oh, you're kind of stupid, you can sell these calls and you can make some income. Of course you can do that. But my point
Yeah.
is, if you're going to play aggressive stocks, you got to have a binary bet, up or down. Of course you can have some protective puts as spreads, but I
Yeah.
think that's what Paul was mentioning.
I think my style is more start with leaps, and then as you get more confident, you can narrow the time frame and start ramping up the returns there. And I
Excellent.
started off I started trading stocks when I started off, and now after I only trade options, and stocks are so boring now. They're so low volatility. Like if something drops 20% on a stock, I'll be like, oh, that's nothing. Like, options can move fast, so I'm addicted to options for sure.
All options can be done 50% or up 60% in 10 minutes. Exactly.
Yeah. So
Yeah, but
thanks for
some
the
of us,
time, Frank. Yeah.
yeah, but some of us don't have the option to actually trade options. Like for me, I trade my 401k,
Okay.
and that's my, that doesn't allow me to trade options. So the next best thing for me is I trade the leverage index ETFs.
Of course, your 401k doesn't allow you to trade any options.
It does, but if it was my personal account,
Okay,
like if
so
it was,
here's a suggestion I have. You need to, yeah, you can use like the leveraged ETFs, which I show all the time, the IWMs, the Qs, and the
uh,
SPX. And
I,
I'm
I
not
do.
I remember, I'm not advising, I'm not a broker, but why don't you take a little bit of money and on a personal on your account, trade some options with a small amount of money, which can deliver the extra octane needed to boost your
Yeah.
401k.
Yeah, it's funny because I did have one at one time, and one time I was playing options,
Yes, sir.
and because you were asking, what was a good time, when you bought options one time. Well, one time,
Mm-hmm.
because like I told you before, I'm a fib trader, so I bought some
Mm-hmm.
calls that were, I mean, it was like a couple of days before the earnings report came out,
Okay.
and I saw the pattern that I've been, that I always trade on. And sure
By
enough,
the way,
that's
just so you know, earnings have very little to do with patterns. Earnings are a
right.
50-50 gamble, but the overall directional daily pattern on a particular company does give you an indication whether the big boys have bailed out of it beforehand or not. So just letting you know.
You see, I didn't know that.
Yeah.
But anyways, that trade I made about 27,000. I couldn't believe it.
Nice.
Uh,
What trade was that?
that was the Apple trade. That was
Nice.
years
So how much
years ago.
you bought options on it to make the 27K?
Yes, ma'am. Yes, sir.
Yeah,
And
yeah.
but
So
but
is
that was
this
a
Rob?
long time
Is
ago.
this Rob?
What's that?
Is
Yeah,
this
this is
Rob?
Rob.
Yeah, by the
Yeah,
way,
this is.
Rob Anderson, just a new member, just joined yesterday. We had a great conversation. He signed up right away. So Rob, welcome. So you what was your base capital to make that 27? Just asking. On the
At the
option.
time, I think it was about 10,000.
Okay, so you basically made 170% on it.
Yeah, pretty
Yeah,
much. Pretty much.
that's a fair amount. Yeah, obviously, and that happens a lot in many things that we do. But generally, for depending on I like to spread out my diversified positions. I would generally recommend. I have to be careful what I say. I wouldn't put 10 grand in option right away unless you have a much larger account, because that 10 grand can become 2 grand or a grand or zero very fast if depending. So I would rather spread that out, on the thing, on the thing. But that was great because
But I forgot to mention I had some of those bad trades putting that much, so it kind of evened out.
that doesn't matter. That doesn't
Yeah.
matter because
So
remember, it doesn't matter what you lose. It's how the ratio that I use. You're gonna make 3 or 4 times back that, and I tend to do it a lot. Okay, so that's
right.
the way I look at it. Now, go ahead with what you were saying, Rob.
No, that was it, and so that's basically the way I trade. So I just want to let you know and let the folks on the call know, because that's the
Sure.
way I trade. Because so I was hoping maybe If anybody has any pointers or how to trade the indices, leverage, that's the only thing I have trouble with right now is hedging myself, because sometimes, like right now, I'm really big on TNA. Made a lot of good profit, but
I know. Yeah, okay. TNA is basically, for people who don't know, is the IWM complement. Yeah. Mm-hmm.
yeah, leverage
Yeah.
3 times. Yeah,
Leverage
3x.
3 times. Exactly. I used to trade that a lot. Um,
Yeah.
so good point you brought up. I'm actually writing down. I'm going to show more charts on the TNA. Here's one quick suggestion for everybody. If you want to play it straight and narrow, just, I've always said this: trade the SPYs, trade the SPX, trade the QQQ, trade the IWM, the TNA, things like that. And on the short side, play whatever you want. There's enough ETFs out there. You can buy the VIX calls. You can buy the SPY.
TCA.
Yep.
Yeah.
Which one is that?
A TCA, that's the complement, the other side of TNA.
See,
It's
I forgot about that. See, I
yeah,
learned something to TCA. TCA?
TZ, like in zebra.
Oh, yeah, I remember that. That was from years ago.
Yeah,
Exactly.
they're still.
TCA. And or you can buy the puts on the IWM, the puts on the Qs, or the SPYs. Now, one thing, let me stop everybody. You look at this chart here. You look at this chart here. Do you really want to short the market at this point? That's the question you have to ask yourself. And if you do that, ladies and gentlemen, you got to be really quick, because this market wants to go here, which is 30.70. That's my estimation. I've been dead right on the market overall. This cup and handle is still so valid, that unless this is negated, this cup and handle, which I've already drawn, and there's your handle, which is a large trading band, talked about in the last video, wants to go here. So unless we have a complete breakdown, please do not play with fire. And if you do play with fire on the short side, just be quick on it, because as we talked about in the earlier part of the session, till the quant funds get exhausted of their shorts and get squeezed, like Ed mentioned, we're not coming down. And it
Hey,
doesn't mean we're going all the way up, but we could possibly go to 31.42, blow the minds out of everybody. Yes, go ahead, please.
no, I was going to ask you, do you? I mean, because we're at a spot pretty much where there's a lot of resistance, and
Yes, yes.
I'm kind of wondering, do you start buying some of the, like for instance, me, I'm thinking about start buying TZA just to
Yeah.
start covering
So,
my
so
winnings.
that's a very good question. And TCA, by the way, guys, remember, is basically the short ETF on the Russell 2000. You could certainly, like I said, you could certainly put that as a hedge. But I have so many winners on the other side. Like I'm looking at a company, not companies everyone knows about. You look at Delta Airlines, and you're looking at the fact that Memorial Day weekend's coming. What if they come up with the headlines? I mean, with the announcement after Memorial Day weekend saying our traffic, which I believe is the case, was blockbuster. Okay, and you look at a stock like this. I'm just explaining why you can always keep ahead. And you look at a stock like this, which is all the way down here, okay? And why can't it go to 27? That's 3 times to 4 times your money. So the question is that the market overall is all about sector rotation. They can rotate out of tech because it gets too overvalued and buy into the Delta Airlines of the world. Okay, they can rotate out of Facebook for 3 days. Okay, scare the living daylights before it goes higher again, and take the stock, this baby, up to where I think it's going to go. Sorry, 1 second. Computer's not cooperating with me tonight. Trying to drag this line here. Okay, got it. So question is that why can I just trade the bottom end of this chart on the daily to $27, which is 3 times my money? So these are the type of things that I'm focusing on in a big way. I'm still playing the momentum stock to a certain degree, but then I'm showing a lot of names, if you guys realize, which are not the regular household names. And that's the way I'm playing it, Rob. I'm not going with the overall market, because one thing I learned a long time ago, the market can rotate into different sectors. You could be down 600 points in one day, and I could have 4 of my biotechs, bunch of my airlines still up on a day that the market's down a lot. And that's what I'm talking about.
I've always had this question, and since you're like a ex Wall Street guy, did you ever do the sector calendar thing?
I was a very lazy Wall Street guy. I know what you're talking about. Yeah, I'm that serious. I was very smart, but I was very lazy. Maybe because things came kind of naturally to me. No, I don't do that, but I know what you're talking about.
Yeah, where they tell you the months where to come in and then exit. You know, I've known that for like years.
By the way, but let me just tell you one thing straight out. Same grandpa's market. You can screw
Yeah.
that sector calendar, throw it out the window. Okay, this is not the same world. This is a world where the market could fall 34% in 3 weeks. Okay, because of the coronavirus, the Wuhan virus, and all that stuff, and the market can rise 25% in 2 weeks. This is not the same. So all that stuff, in my opinion, I'm just giving you my opinion, is the old-fashioned market that doesn't work. And that's the reason why 90% of hedge fund managers are sucking their thumbs, telling us we're going to go to hell in a handbasket, not making money, and all losing money. And that's a fact. It doesn't work like that anymore.
Sweet.
Okay, guys. So any other quick question? Because I got to wrap up. It's 9:40.
Oh, Frank, can you do a quick review of NVIDIA with the earnings tomorrow?
Sure. I have no freaking clue. No, I'm just kidding. Look, Nvidia's up a lot. It can go up a lot. So only way I can do it is a fib, just to figure out what's going on. Okay. Nvidia's numbers could be so huge, I have no idea. I would put a straddle on Nvidia. I would buy a few calls, a few puts, and or what I do very well these days, I just buy some common. If it goes up, I sell. Like I bought a Take Two. Stock shot up to like 155. I sold half, a little bit more than that. Next thing I know, the stock's down, but I still took some profits in. So just buy a couple of common, guys. Nvidia, Nvidia, the Fibonacci extension is $429. Everything in the chart looks absolutely beautiful, technically. Now, on the first day of earnings, after a big run up, technicals don't matter. They don't matter. What matters is the stock eventually will go higher, unless they completely mess up, which they're not going to. So let me move the price levels down on the left. Right there. Okay. By the way, you guys admit this is a heck of a lot better than listening to Kramer?
Oh yeah, you don't do buy. Oh yeah, you you did it the other day.
I did it once in a while, but my technicals and stuff are so precise. And on top of that, you know why I laugh? I love Kramer. He's a great guy, okay? He's educating the lost masses, on whatever. Like he says, oh, use the Fibonacci queen. I'm like, dude, we talk about it all day long. We talked about the S&P levels before it even happened. And they always come up after the fact. Like, okay, if it happens, this happens. Still informational, but hey, laughable. That's what I'm saying. But anyway, so everything technically is perfect. What can the stock do over the short term? Which is tomorrow. The stock can drop to 344, which is about 20 points lower. Right there is a gap. You see that? See this gap?
Yeah.
I would be a strong buyer at 344. Stock could fall for no reason other than hedge fund manipulation, all right? To 327. That's 40 points. More than that, right? So it could come here, which is basically the breakout level, the inverse head and shoulder breakout level. So after hours is going to be very volatile. The way I would play it, I'm going to buy a bunch of shares. If it goes down, I'll be able to sell it right after hours till 8 p.m. and I'll buy, I'll buy a little straddle, or some very cheap calls on the upside. I have been very successful, just so you know, just buying in many cases on the more expensive stocks, which are the $300, $400, $500 level stock, even in Tesla, just buying a couple of common. You could buy 10 shares. You could buy 40 shares. If the stock is up 20 bucks, you just made 800 bucks for doing nothing other than watching the screen between 4 p.m. and 5 p.m. when the stock moves big time. Are you guys with me?
Yep.
That's my way of doing things. Yep. Pretty simple that way, okay? Because what happens with the option the day after is a complete unknown. Complete unknown. Because unless you buy close to the money or in the money, which are pretty expensive, they will not pay you. The market makers will not pay you for the big move on the stock unless it's way above the strike price. Are you guys with me on that?
Yeah.
So I'd rather play some stocks. If I'm going to make 800 bucks or $1,000 after hours, come on. I don't have to worry about waking up in the morning and wondering what the options are going to open up, how they're going to screw us with the prices, the bid ask, and all that stuff. So that's all I got to say. So that's my take on NVIDIA. Overall, I think the numbers are going to be great, but the stock is very extended. So a $20 drop on the stock, I'd be hands-on buyers. But if I buy a couple of common, doesn't matter whatever you want to buy, then you can sell it after hours and make a nice couple of $100, $1,000, or whatever, how much you want to put in. At least you can control the flow before the next morning. Do you guys understand what I just said? You can do it with any stock. That's the reason I was able to sell Take-Two when it ramped up to 100. Here, this is what it did. Watch this. Take-Two went to 159. I managed to sell a bunch of shares, more than half, let's put it this way, at around 156. Where is the stock right now? 139. You don't think that can happen to NVIDIA? It can happen to any stock, especially the big boy stocks. Now, will it bounce from here tomorrow? We'll see. I think it will. Their numbers were fantastic. But this is what happens after hours because the hedge fund boys and the automated programs are out to get you. Okay? So you can do that with a $20 stock. You can do it with a $140 stock. And how many times have you seen us play reversal trades from being way down to way up? And this is a prime example. I managed to get out around here. I wish I sold it all. I didn't. But I didn't have that much either. Made some nice money. So by the time, if I have to sell it at a loss, which I don't think I will because the charts still look pretty damn okay. Okay? So basically the stock is down here right now. Big deal. It's going to retest the rising 5-day moving average. I'll be a buyer there unless it breaks above that. That's the way you learn trading. And Rob, once you get used to our service a little bit, sign up for the advanced coaching sessions. I teach a lot of intense stuff that's going to help you learn and manage your positioning. It is not always where you get in, what you think about the market. It's how you manage your positions. And that is the God honest truth, and I should know it. On that note, Boss, Ed, Mac, Mike, Paul, Rob, thank you. Let's get some more referrals. There's some good people in here. Just thank God for everything. Thank God USA. Thank God President Trump for what he's trying to do. And let's move on. Good night, guys.
Thanks. Good night.
Later.
Thank you.
Frank.
Thank you.
Night, Frank.